Mr. R.K. Bansal of IDBI Bank joins us to give us some view as to how he is looking at the new rules of asset takeover announced by the Reserve Bank yesterday. Mr. Bansal, good morning to you. What's your sense? Do we see people like you taking over some assets anytime soon?
Certainly, I think some companies where the promoters are not cooperating that well after restructuring also. I think those cases could be fit case to be taken over.
Okay, but for cases that are already underway, legacy assets, like for instance a JP Associates or a JP Infra, you cannot use it. Only when they get into restructuring you can use or put this clause in, right? At the moment these companies are not in danger.
No, those cases which have not been restructured, it will be difficult because you will not have that clause to convert into equity. So these cases which you are referring, they have not been restructured.
Okay. But if they were to fall into restructuring, you will have to put in a restructuring clause. Can you always hammer it in the, can you arm twist the promoter into accepting a convertibility clause always?
Yeah, I think as per the latest yesterday's circular of RBI, this is compulsory now in all the restructuring cases.
Okay. Okay. So what is your sense? Do you see assets, NPLs declining in the quarters to come? Do you, I mean, how much of asset recovery or asset sale are you expecting in 2015 itself?
That's difficult to estimate just now, but I think it will at least help in bringing the promoters around and to solve some of the cases which are sticky. So I think NPA-wise, if these cases become NPA, that also will help that we can help in changing the management and recover money, which may not be 100%, but at least a substantial amount can be recovered.
Okay. Mr. Bansal, morning. How smooth do you think this process could be? Because banks don't have the expertise of running, many of these companies, despite the fact that they may take controlling stake. And also, will it be very difficult to find new promoters for many of these distressed firms, you think?
Yeah, it depends on the overall economic scenario. Today, many of the projects which are, I think, in difficulty are in steel and power sector. So we need to see whether there are new promoters. But I think in power and all, new promoters could come around. The issue here is whether banks are not going to run these. No, I don't think the idea is that banks will run these companies. The idea is that banks should convert into equity and then transfer the ownership to someone else.
Okay. Will this also be applicable for the 525 schemes?
No, the applicability, as I mentioned earlier, depends whether you had done restructuring, whether you had this clause. In old restructuring clauses, we had convertibility, but that was only for defaulted amount. But in some cases, the defaulted amount itself can take care of 51%. So not necessary that you have this new clause.
Okay.
Okay. Now, I think, Mr. Bansal, what Sonia is trying to ask you is, suppose you have a company, like for instance, Bhushan Steel has already been recast, but suppose it were to come to you and say, please make mine into a 525 scheme. Can you insist and say, no, I don't see so many revenues, visibility, I want to put in a convertibility clause and not give you the 525? Would that be the argument at all? Or do you think, more banks are likely to go to the 525A?
No, it depends on each company and structure. Basically, the 525 is not a restructuring in as per RBI guidelines. So this clause can be put only in the restructuring clauses. So finally, if banks feel that 525 will not work and only restructuring will work, then they will insist for this clause to be there.
But in a 525 case, if the company does not meet the milestones, then you cannot convert. You cannot force a convertibility clause in a 525 case.
As of now, 525 is not restructuring, so we cannot insist, I think, on that.
Okay.
Mr. Bansal, don't you think this move, I mean, obviously this move is a very good move by the RBI, but don't you think it's come in a little late in the game because most of the restructuring is already done? It's not applicable to already restructured cases and also to cases where the revised payment terms have already been finalized. So don't you think it's rather late?
Maybe slightly late, but let's say this is the right time because the economy is not improving the way it was expected, and now we know which cases are having problems. So where we can take this matter in hands and then where promoters are not cooperating also. So I think it's a good timing in that sense. And restructuring will happen in some cases where no other venues are working, despite the fact that it will become NPA. Banks will do restructuring.
All right, Mr. Bansal,
Okay,
thank you very much for joining us with your initial thoughts. Okay, the bankers have been largely positive, but we will have to wait and see the proof of the pudding. In this case, definitely lies in the eating.